Hello and welcome. It is the 10th of July, 2019, as we're heading into the 11th day. This is gold for today. Interesting move, just 8:30 in the morning and going from 1391 instantly up to 1408. Now it's at 14 and a quarter with a very distinguishable trend in which it's facing. I mean, this isn't a straight line, and I suppose, if anything, one interesting aspect, and I'm not going to draw it here, the rate of ascent for this one, for the next, if it breaks the trend line on this level here, and we can see it's flirting with it, how it's trading in here. Take this exact same rate of ascent and move it within this high. So this exact rate of ascent to this high is where I think any break it might go to. That's just an interesting idea. But let's keep zooming into multiple higher time frames, starting with the 15, and we're getting well above this level of resistance. We'll keep on going each further time frame out. Significant up move, significant down move. Now this is a significant up move. We've gotten to this level of resistance, so the lower end of this total upper area on the 3-hour term time frame. We can see the sideways range. Very, very, very clear. Like a bull flag almost. I mean, almost, it almost kind of is. But in this area, one hit, two hits, and a couple hits within, but this little point in here, we got resistance here, which it's approaching, and a little bit of a semi-level in here, which it's now entering in towards. So the upper end, it hasn't obviously spent too much time in this point, just this here, a very small pierce here, and then of course the completion of its fall, and really not that much time. So interesting if it can hold and stay above this for a period of time. But if it gets up to this becomes an interesting situation. Now, what do we do now? Is it going to break it? If it breaks it, it could break it good and have a good move. And of course, if it doesn't, then I'm going to be looking for a 61.8% hold. And it might hold less than that, but a significant higher low to in here. If it does go down here, then we're just back at the bottom of the range and another test of support, and this range-bound market would become clearer because this is test number 3. Can't read that too well, but 1, 2, and now 3. We go to the 1/3 day chart, or 8-hour. And that's not quite 1/3 on here because I don't think that, I think it's 23 hours a day on this. I'm not quite sure because of the 5 o'clock to 6 o'clock Eastern time zone hour. But more of this sideways action, breaking out above the 18. It really is just holding and staying in this area because when it's going below here, twice it has tried it, it didn't break down. And this is really the second attempt in going higher. For that's what was the case here. Like, how did the market sentiment look? Well, we've had this great run, correctionary phase, and it looks like it's going to go higher. It failed. But what succeeded was its correction on its attempt because it held and stayed above this 18. And amongst doing so, this is another test, another attempt in getting this going because we're coming from here. Where are we now? Where have we came from? Where do we have the potential to go? And within it, how does that situation look? Well, we came from here. We are in this sideways range now. Within it, we are leaving it towards that upper level. And where do we have the potential to go? Well, let's look at what would happen on a break of this resistance. And I'm going to move this chart to the actual gold. And the reason why I have XAU to the USD is because I'm going to use this drawing tool and then keep on doing that. So if we go in here and we take a look at gold this way, it's going to look the same, but we're going to have Fibonacci lines. There's that 1321. And then that was that big resistance that it needed to hold and stay above. And it's doing a magnificent job in holding and staying above it. Because since it broke out above it, it had resistance in here, supported it, lifted off from it. We haven't touched that line since. And rather than supporting this line, which could have been one of the ways of holding and staying above, no, it supported a decent chunk higher at the 1385-ish handle. And of course, we got resistance established at 1439. Let's take a look at this on the daily. So within the daily chart, this is where it gets very, very amazing, because one of the words that I've made up that I like is exitation, which is what this is attempting to do, is just that. Exitation of the 18 average. Here was that one exitation here. Again, it failed, and there's a succession of, or the success amongst its correction from that final rally high. It was about as deep as you could go to make a higher low. Really, that's about as it. And it did support the 18 lows magnificent. But it's leaving the 18 highs right now. So thus exitation. So we can't really see too clearly here within this to where we have the potential to go. Now, one thing you can do is the following. And I'm going to do this, and we're going to see. And I'm just going to clarify the best lows I can take. And yeah, I think I got to take this low. So we're going to take this breakout low. Well, this key low here was 1271. What I want to do is I want to find out where the 61.8% down number is. It'll be, I don't know how close to 1321 it's going to be. So what we're going to do is I'm going to take my Fibonacci calculator, and I'm going to use a low of 1270 even. And I'm going to use the highs that we've had, and I want to determine, in this case, I just want to determine what the 382 number is. So we have a high in here of 1439, and on this one here, 1437. So 1439 will be the high, and I'm looking for the 382 number. And that comes in at 1332, which coincides with this high in this congestion area. So now what I'm going to do is I'm going to take 1332 and 1439, because I want to take the 61.8% down level of what the correctionary move should be. The fact that it didn't correct that much was magnificent, that buyers didn't wait for those lower prices, and sellers really weren't as aggressive in not going down to a 61.8 correction. So with that being said, I'm looking for the up target here, which brings me in at $1,509. So that's my first reaction, or my first indication to a calculation to, I think this is able to go up towards. Let's take a look at this on the 3-day chart. There's just, I don't know what you want to name this, but you have the nice straight move up, and there's all this choppy up and down congestion. Well, it's got to break one side or the other. Break this side. Okay, so we're going to go down to here, maybe even down to fib. We break the up one. Well, we obviously, low 1500s is something that's already been calculated. On the weekly term time frame, I'm just probably going to just say, you know what, let's just go to the month, because we've had all of this resistance breaks or tests in here. Obviously, a convincing breakout is what we're going through right now. And maybe it comes down, maybe it doesn't, but that's the thing. When you have a convincing breakout, that's what's going to happen sometimes. But the evidence is pointing to that's not going to be the case, meaning this thing breaking above this, it could very easily go. And even that 1510 number just might be a short-term level, and we go up there. And with 1522, the fact that it usually pierces above you, we really got to think that that is where it's going to be making a move towards. That's about a $100 increase from where we stand right now. But amongst how the pattern plays out within this in the 18, obviously a continuous amazing uptrend from the start of the millennium to the highs to and the start of this current decade, which is almost over. And what we've had is this decline where price action spent a significant portion of time. Left it in the start of 2013, and it bottomed at the end of 2015. So several years. And now it's attempt. Okay, band flattening out stage one. Okay, resistance established in this area. Okay, that's stage number 2. Come back to the band. Okay, here's the comeback. And attempt to break it. Oh, you know what? It was looking in August like it was going to. No. I mean, a successful correction. Another attempt all the way from the start of 2018 for like the entire cold season, at least North America, Canada. First 3 months or so, 4 months of 2018. Nope. And then, we dip below here. We go below this support, but we go above this. Just to hold and stay above the 18. That's when I say, can a market hold and stay above it? And I mean, decent move there, but when it rebounds it like that, you kind of got to classify that as such. And then when it gets to the 18 highs, it gets above it. Okay, another attempt here back in the end of last year. Did it get above it? No, we had several months correcting, but that's exactly what we've seen. Strength at the 18 highs, that correctionary move, and now convincing break. Stage number 4, break established resistance. That's done. It's done. Bull market on this particular time frame. Thus, the monthly and the very, very long term is a bull market. The last time it was in a bull market would have been, of course, well, the start of 2013 and of 2012. That would have been the last time. And now it's a bullish. 1522 is the next level of resistance. The way I play Fibonacci is it usually hits all the time. Now, as trading, it should be pretty obvious as a trader how you play those numbers. One of the most obvious ones is if you're looking to sell at 1476, why not wait to 1522? That's just me. That's one way of playing it, and whatever else, that's up to you on how you decide you want to do it. But it can work in wonders. Another one is, oh, if I'm going to sell at 1522, I'm only going to sell a portion, and maybe it comes back and maybe it doesn't. But if it comes back, it can come back to 1321. Now, I have a sick, scary feeling that this is going to happen. I mean, it's fine if it does. I mean, there's a part of me that doesn't want it to go this extreme, but just that's going to happen. And when resistance doesn't happen at key levels where it's supposed to, and it's supposed to resist when it enters the 15 and a quarter area, then, wow. So, what we can do is stick a third line in. I'm going to do Fibonacci again. I'm just 1920. I'm going to put exact numbers in this one. 19,294. I'm just going to write that in the calculator. And of course, the 4 represents 6 cents as far as this low is concerned. Now we're going to get those same numbers. Maybe it should be the exact ones if I do it the same every time. 1046.54. 1046.54. 1046.54. That's 5 digits. That's 6 digits. Yeah, that's wrong. I did the top one wrong. So 1046.54. And 1920 area. 1920.94. All right, does 1522.56 come up? No, it doesn't. 1532. So it's in that area. And actually, yeah, 15. No, it's 1523. So I just echo whatever number I probably put in. 1321.07. 1319.81. I mean, it's pretty much the exact same number. So we have 1,665 as the number. So I would have done something like this. And it's like me to do this too. Close enough. And it usually pierces extra, so that's like the gateway level, if you want to use a word for it. Gateway to the entry to a bossish kind of level, because getting above this is a move up to here. And just for fun, let's go back again upon my theory of the following. When I'm looking for an upside target, and I'm going to do it 2 different ways. I'm going to look at this. I'm going to give 2 different numbers for a break of this level. I'm going to be interested to see if anything near 5,000 comes into play, or if any of these breaks could actually, that would be next level after. Because it'd be scary if it goes to 5,000 before the end of the year. That's what I'm saying. I'll talk more about that throughout the year if it does or shows signs of doing it. See why I said that on July the 10th. But we'll see as we come very soon. Anyway, so first I want to calculate Fibonacci upside using the high and the low, which I've already done in here because we got the $1,000 low and we got the high. I'm looking for an uptrend and its significant price move. And its up target is $2,796. So we'll say 2,800. I'm not going to, yeah, I will draw it in. So 2,800. But I'm going to put another line in as well. Close enough, and it's a pierce above. This time I'm going to, this is about $250, I think, on the low. So I'm just going to calculate, it's 1920 and 250. I'm just going to do it that way. And I don't need to put the decimals in. I'm looking for the 38.2 number. So let's just do it that way. And the 38.2 number is 545. So I'm going to do 1920 divided by 545 to the root of 1.618, multiply 545, and that's going to be the next target. But for me to do it, I'm just going to write 1920 and 545 in here. And my up target is $4,181, and 5,000 will certainly be a pierce above. Interesting. Okay. Wow. It'd be interesting if that happens. So $4,200 is the next target, breaking 28. And a pierce above that would be about 5,000, obviously. 4,200. There we go. Wow, how close am I? 41,298. Oh, close enough. $2 off. Rounded. So those are the key levels that I guess I'm going to be looking for within the gold, breaking above this. Now it's interesting how many times that I draw these lines in on this channel. So those who have been watching this for the last, well, at least for the last couple of years anyway, but even before then, when these lines come in, just how often and how remarkable they end up playing out. So July the 10th, I'm putting them in. And when resistance isn't played, again, expect to move to the next level. I have given you, after 1522, and I know this one's not drawn in line, but I've given you 4 levels. 1670, 1920, 2800, and then 4183. Above that, holy SHIT, this is getting extreme hog wild. We're going into 5 figures, and what's going on with this everything, and how did they get to 5 figures so fast, let alone like 5,000? But the long-term breakout pattern, based on this low and this high, to me, I have to put in at $4,200. Let's move on to silver because it's also a precious metal. And we're on the monthly. We'll just go back a little bit as this one plays out. Definitely, to say that silver is lagging the movements of gold amongst its monthly pattern would be a monstrous understatement. For I mentioned gold is bullish on the long-term time frame. Silver isn't. Well, if it isn't, what is it? Is it bearish? Yeah, but it's bearish, and it's in a correctionary phase. It's been in a correctionary phase since the spring of 2016, or for over 3 years. Since about March. Ever since this candle here. That's when we had stage number 1, band flattening out. Stage 2, and then stage 3. And, well, there hasn't even been close to a stage 4 attempt. Not even maybe. And we're still long ways away from it now because price action has to rise up to 21. That's what established resistance is. However, thus far, this failed breakout as it plays has not failed its correctionary test. But, you know, sometimes you have like in school exams. And well, for me, I was one for, let's just say it was a 2 hour normal exam. And there are people who can't finish it because it's just not enough time for them. And I finished in like 25 minutes, and that's happened in real big time for me in real life. In fact, one of my biggest records was I think it was a two hour exam, maybe 2.5 hours, and I completed in like 25, 27 minutes. And a lot of people were struggling at the end. Well, just imagine if they gave them 4 or 5 hours instead to do it because they need that extra time. And this is almost that 5 hour test, is how I look at it. It's like, oh my goodness, it's the correctionary move from this breakout. We still have this declining, but until it's able to get down below this, its bear market is um, in that correctionary trend. It's in its full steam bear market going below 1357 right now, but that not the case right now, of course, at the $15.28 level. These lines on Fibonacci, which are just working out phenomenally well, are ones I calculated a long, long, long time ago. Even before it was resistance, I was calculating this stuff back in here in 2010. I had these lines before. You can go back. I mean, whatever. But you can go back, and I probably would have. I don't know what videos to check because I haven't watched them, at least not since then. And I don't usually watch my videos anyway. But the this little area, I'm like, okay, yep. And how did I calculate it? Well, silver, and I don't get all the data here, but there was a big trading range between 4 and 8 from what was $50 back in 1980. So $50 going back down. And amongst this, we have my old school Fibonacci. Okay. I'm just going to quickly pause the tape. Okay, sorry for that delay. As within the range, it was $4 to $8 from the fall. And amongst such, we had a move all the way up here. But what I did is, this is, and this one is linear, but what I like about this is its rate of ascent for each line gets a little bit more higher. If we look at the math on, and I'll go over the calculations, I'll just do the calculations now. It is the range, subtract the difference, which is 4, so 8 minus 4. And then you multiply it by the rate of the difference, like 1.618, and then you add the low of 4. And then there goes 2.618, 4.23, 6.85, and then knowing the Fibonacci scale, you can just keep on going with the Fibonacci. I think the next one is 11.09, and so on and so forth. So that's how that was calculated. But the rate of ascents get better each time. So for the break of 8, what's the difference going from 8 to 10.5? 2.5. So, okay, well, how about 31 to 48? That's 17. That's over 50%. And 8 to 10.5 wasn't close. And that's the whole, each one of these moves, a percentage move higher, is just that each time. And it works out pretty good. I'm actually a huge non-fan of linear Fibonacci, but this one is one I think works relatively well and has been phenomenal within silver. And I think 70 something, 75 and 120 are the next two levels after that, if my memory serves me correct. From way back then, those were the next areas, like around 75 and 120, I think, are the next Fibonacci lines not drawn in. And on any breakdown, if the bear market goes down, we're waiting for 1053. But it tried to do it, and here it didn't happen. And here it didn't happen. And if it breaks down below, we'll see if it happens. But that is how the Fibonacci looks. That's how the monthly time frame for silver looks. Let's take a look at this going back. I don't know how much. We'll probably go back to maybe the 3 hour, 1 hour. Although it was an interesting day today for silver. So within this, we have the just a phenomenal large down move. When you have like every single day decent red candle, not even really a single green blip at all, from this high on June the 11th, bottoming on September the 10th. So June to September, that's 3 months, where every single week was down or break even. and some significant down ones along the way. And then it had its first correctionary phase, and it failed in breaking down after that correction because the long correction in here, there's a red candle to say, okay, here, there was your move with the 18. You spent some time in there. You got to the 18 highs. Now it's breaking down. Okay. So a green candle, I mean, that's kind of neutralish more than anything. But here's another spot. These two red candles, an attempt to break it down, didn't happen. And instead, you had a green candle, you consolidate the highs, and there's the exitation. So clear break of this resistance at 14, 15, and a solid move up to 16.13. But definitely a failed correctionary phase, but it only had one leg lower at the line, the Fibonacci line for support, at a large pierce above the double hit area. So close to this point, but not quite. But its correctionary move is reacting very solidly because it gets to the 18, it's the lows, and it doesn't resist the 18 lows, but it does resist the highs. And then in the following period, it not only supports the lows, but it also resists the highs in the same period. That's just an interesting spot that you see. It's like a pause-ish kind of mode. It keeps the attempt of the neutrality phase live. You're waiting for the break below or above. Well, there's a break above. We've seen it clearly this week, and it pauses it within it. A price correction back to where it comes from, and now getting it back. So this red candle size is matching the green candle size right now. As we are, what day are we? Wednesday. So we're in the midway part of the week. We got 2 days left, or 60% of the way through. A little under that, over that now, like 61.8ish or so percent, ballpark. On the 3 day term time frame, this is a situation in which clear down move, clear up move, clear down move, and now we have this established resistance coming back and now trying to leave this very highly rising 18 and highly rising on a comeback, of course. That's the key thing because it's always going to have a difficult time having a great rate of ascent when it's coming off a good red candle like it did here and then ones before then. But the whole band going up really high, not even close to the lows. Leaving in here, you're seeing price action solidly over 15 and 2/5. Especially if this happens anytime Thursday, anytime on today's session. And I'm saying today for Thursday. And if it holds this whole area around 15, like the low, like 15, 18-ish or so, 15 and a quarter, if it can hold this area all day, and then on Friday you see it like that, you got to give it a lot of scenario, a lot of probability for it to have a good break above this level. And probably the one thing I'd be expecting is a fast move, at least next to this previous high. And we're looking at that from the 3 day term perspective. Now let's look at it from the daily perspective. What does this tell us? Well, the daily term perspective obviously has the clear, accelerated, very long downtrend. For there was one leg lower, really a small second one, another one here, and then another one here. And several times within its correctionary phase in the 18, it was unable to even accomplish stage number one on reversal of trend. And stage number one is for a flat band. If it would have, say for example, in this period here where we had the green move, we can see it followed a big red move down next. Well, that's never going to make the 18 flatten. But if it were to have a pause move, where it would do something like that, that would be something to set it up into flattening. But even this pause move in here, it started to get close in this point here, but these next two red candle down moves really enabled it to flatten out. The 18 lows barely starting to flatten out here, but not really. That the flattening never really came until it actually got up to the 18 average of highs. And then the next period, it's working on stage number 2 for establishing resistance. In this case here, that's a little tricky, but either A, you can say, well, this was established resistance here, and it's high enough and it's a good enough move. And I can also see that the next following period, that the lowest price is near the 18 highs, so kind of close enough. And I also can see that on this here, that it kind of broke above. Now the key thing is if you play the strategy for the break of pre-resist or established resistance, which is what it did on and here on June the 7th, is if you're playing on a break above, don't be surprised if you get hit with your short-term losses and your portfolio's down. And this was a very deep decline. So if you got stopped out on here buying up here because you thought it was good, well then it was a losing play because look what's happened since. So it had its successful correction. But if you didn't count that as break established resistance, this most certainly was. So if you didn't deem it bullish on June the 7th on the daily time frame, it was most certainly deemed bullish here on June the 19th. And as stated, if on the break you can get an early correctionary loss, and we can see it hits this high, retest of this level, now the correctionary phase, it is holding and staying above the 18 lows. I will say it that way, holding and staying above when something like we have seen happens, which is this. That means it manages to have a little bit of time below it. It's going to establish a key level of support, not singular, a key level of support, lower below it. And in time, it can take a little bit of time or it can do it fast, get back into the 18 band, and that's where we are. So it's in the 18 band. The uptrend has lost momentum. Thus, we're on a newly uptrend, only one leg higher from it so far, and it's in its correctionary phase. In the resumption of that trend, we need this market to have a good move above the 18 average of highs. And right now, that would come in at least 15 and 2/5 for that point. On the 1/3 day chart, situation in here is the attempt to resume the trend was a failure here at the 1800 timestamp. Thus, it broke established support. This is where things get really interesting. And that meant if you're saying just go short here at 1496, well, like I stated on the long position, you could expect some early losses, and so is the case here, but what's the deal with it? You have your correctionary phase here, and it's not resisting in this level too well. So, it pierced above and come down, so it's not showing signs of pierce above. It's showing signs of this not resuming the trend, but reverting the trend. Revert. Resuming is an uptrend that's went neutral. Reverting is when you're in a bear market. And this, it wasn't for long, but it was in a bear market down here. And might be a failed breakdown. And in the event of this being a failed breakdown, which gets down, the key support was between 15097 and this 1503 level. So it broke it down below there. It came back to its area where it came from, thus resisting where support was. Okay, that's what bear markets will do. But it didn't break down in here. And then the follow through. This is not what bear markets do. This is what the reversals do. And the potential for the gains upon this should be relatively should be fantastic for what could come into play. Looking at this even further here on just a strong setup in here. You have this down move, so there's the band flattening out. Even more flattening action here, just showing a little bit of strength amongst, I guess Theta's doing good, which is what I want. My key alert hasn't come through. But here we have all the sideways action in here on the 18 highs on this. Again, that's a strong sign. And then the breakout, and it's just been following through well ever since. So as where as we can go for, to me, previous highs where I'm looking. I'm not going to do any Fibonacci drawing or anything. I've done all that before. I've already given you the levels for the long term. And the next key levels, I'm looking at previous highs. So the easiest way of doing it, like where do we go next? When you look at a chart is the three little bears analogy that I like. Because in that story, it was like the beds just not being like not too soft, not too hard, but just right. The food, when you get like your coffee, you don't want it too hot, too cold, the porridge, all that kind of stuff. So for this case, the breakout of the resistance, too small would be in the area of like 1576. No, no, that's too small. And just right just happens to work out to in the area of this previous high. Now, what would be the maximum for like well, that's just a little too much, and maybe breaking that high. So just that whole level there of thinking is like, okay, well, just somewhere up here because we have this high here and then it just went up here, so now it's just going to go somewhere around here. That to me is one of the easier ways of doing it as well. If this level of resistance is not such, and of course if it is, expect previous resistance to be support. But if this level of resistance is not in play, then I'm going to be looking for a move up to 1612. Let me just take a look at this again. Yeah, 1612. That area there is here. So if that level, so we're talking about breaking because this resisted this support. So if it breaks this level, we're talking about going nicely into congestion, with the upper area of that being 17. And again, you're using the line differential from this line to this low. Where would you expect to go? And like somewhere around here. So a nice break above 17 is where I think resistance would be on the break of the low $16 level, which of course was the resistance in which it established at the earlier portion of this year. Thank you for tuning in to this video, and long, it's long. 36 minutes and 49 seconds. So I'll conclude by saying, to me, people talk about, oh, you got to like silver. You don't get into cryptos, just play into silver. Well, first of all, you can get into both. But one of the interesting ways of accumulating silver is playing the crypto trading game. And if you're successful, and there's a lot of strategies that can give you good probabilities in your favor, and obviously your risk-reward strategies, the better a game plan and the better you and the best you execute and such, the better you're going to do. But when results give you good profits and you get 4, 5, 10, 20, 100 type X gains in cryptos, and I'm not kidding around when I say 100X moves, especially with a good calculated high risk, high reward strategy or good risk reward management to try to get those high gains, which can easily be done, especially for mathematical geniuses. And you can get good gains, and all of a sudden you're like, yeah, okay, so you put in, say, a grand, and I talk about 100x grand, 100x gain. Oh, my 1,000 turned into 100. Yeah, how about to take 20, 25,000 out, 30,000 out, even if you just want to do 9,000 out or 5,000 out. The amount of silver that you can get, a decent amount. And you can buy it with the cryptos. Say you're playing Theta and some other LITECOIN or whatever. Well, they're high, you sell them both, you turn the Bitcoin into silver or gold, and or. So it's interesting to see if gold goes up to that of 5,000 area. If it does, then it's just going to be step by step upon these levels in here. And I will do one more Fibonacci. So we got the $4 lows. Now you know what? I gotta even go lower than that. I know my silver data. But you know what? I'll do 4 as a fair number. I was thinking about 385, 377, even 363. I remember it hitting, or from data purposes, I remember seeing. But we'll do $4 and $50. And we're looking for the 38 too. So $10.50. And the up target is $131.17. So just something to keep in mind. That's exponential Fibonacci, the different way of doing it. And thank you for tuning in. Yeah, what I hope, the final thing I wanted to say is, if it goes up there, I kind of hope that it doesn't happen, but I'd be happy if it does. Because crypto trading, the lower these prices are, the cheaper it's going to get. But people have said that for years, and well, I guess they got what they wanted. And you can keep saying that until it happens. You know there's going to be a time where these things are just going to go out big. And the longer you have this type of, oh my goodness, it's taken forever kind of move, then the bigger the breakout cycle can oftentimes be. So that's just something interesting to keep in mind as well. Wow, I didn't expect to do 40 minutes. I was expecting 20 to 30. Thank you for tuning in. Have yourself a great day. Bye bye.